Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions, what to expect short-term, long-term. Has the market reached the top, or will we have continuation? Which sectors are leading? Where do you find opportunities in the market? And to answer any questions you might have. Before we begin, again, I want to say thank you to everybody who joined. I appreciate your time. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. If you're new to Tradespoon, please type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. I'm going to go to specific trade ideas, trade setups. So disclosures are important. Right? Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If you're new to trading, I would encourage you to visit optionstrading.com so you can understand the risk associated with trading stock or options. Mark, go over earnings setup for G. Yeah, please type in all your questions. I do want to make sure that I answer all the questions you have, but appreciate it. And you can always pause the screen if you need more time to read the disclosures. All right, before we jump into a trading plan, let's talk about market. Where do we think the market is heading, right? We do have January expiration today, so don't forget to close your positions, January positions, especially if you're in the money options, all right? And that's what a lot of people are doing, right? You have leaps expire. This is the biggest single stock expiration month. So there's a lot of volume, a lot of rebalancing. You can see VIX, continues to go higher. Did pull back significantly today, yesterday, but it did. Even though QQQ is making all-time high, and Spider is retesting all-time high, VIX also grinds in higher, right? And you have 10-year yield. Also grinds in higher, and above 200-day moving average, about 50-day moving average, and now you have dollar also about 50-day moving average, about 400. So there are divergences, right? And IWM, right, and small caps, right, are kind of very weak together with ARC and KRE. But sitting on 50-day moving average doesn't look like it's breaking down. I mean, it broke the uptrend, the October uptrend. It did break that. It's sitting below the September of last year low. So there are divergences, right? And we've talked about that, if you're a top to bottom trader and you look at the macroeconomic macro, right, you can't really have NVIDIA and AMD and Microsoft, pushing the market higher, right? You can do it for a certain amount of time, but at some point, either the rest of the market catch up. Actually, I was looking, spiders back in, is Bob here? Bob is not here. Okay, but we were talking about back in June, right? Back in June, right? I was pretty bearish on the market. Sell and main go away. We reached 430, which was, let's do weekly. Probably weekly is better. All right, so I did say that back in June of 23, right? Right before NVIDIA earnings. Sell and may go away, right? We've reached this overhead resistance, which I still have, 430, and I was basically saying, it's time to sell, right? Then NVIDIA went earnings, and instead of going lower, which I anticipated, right, starting in June, it went the other way from 430 to 460, right? So then, if you compare it to IWM, let's see. Well, before we compare relative, let's just look at absolute IWM. In June, right, it lifted the entire market, right? NVIDIA earnings, it didn't just lift NVIDIA, Microsoft, and AMD. The entire market continued to rally all the way to 200 level, right? So it looks like the beginning of the year is a similar narrative, right? NVIDIA continue to grow, AI spirit alive, and a lot of benefits, companies. So we do have, again, this rally after AMD announced, their new chips design and increase in sales. But it's not, at least as of right now, it's not translated to small caps, right? You have divergence, right? And the same thing, yield, it continues to grind higher. So you have the divergence. So there's two possible outcomes. Either IWM is able to hold on to 50-day moving average, right? And this is just a false breakout, and we're gonna reverse back up and at least jump above 200, above this uptrend, right? We need to get above this uptrend, and this is a false breakout. Or QQQ starts slowly, breaking down. You don't see it in QQQ, right? It's kind of Microsoft, NVIDIA, Google keep pushing it higher, but I would say, it did break in January. It did break this uptrend, so it's either going to break above this uptrend or it's going to test the uptrend and revert down. A lot of it depends on earnings, right? A lot of it depends on earnings. We haven't, it's only been 2 weeks for now. Just banks, some of the energy names announced earnings, but for still not enough clarity. So it looks like people again waiting for the probably next option expiration, right, which is middle of February, and that's when we're gonna have 2 unknowns, right? One is unknown, gonna be macroeconomic data in terms of Powell is gonna give a Fed meeting end of January, Wednesday. I would circle January 31st, right? That Powell speaks on Wednesday. And that's one major event in the next 2 weeks. And then you have earnings, right, from Microsoft, Apple, and Amazon, which is probably a week after that, right? When is Apple announcing earnings? 2 weeks from now or 3? 2 weeks from now. So yeah, so right after, right? So that first week of February is going to be another week where you're going to have Fed in terms of when they're going to lower interest rates and by how much, and then you're going to have most of the earnings from large caps that are pushing the market right now, right? And hope that their earnings is accelerating, and that will set the tone for the market. So the question is, if you look at spiders and the market, right, it looks like higher highs and kind of trying to get to triple top. So there are 2 scenarios, right? Earnings are better than expected. Fed cuts rate in March, and we are up and away, right? Going into the March, right? That's scenario number 1, right? Better than expected earnings results. The bar is set low. Unemployment is still low, and Fed is going to lower interest rate in March, or if not March, they're going to say, okay, we're going to lower interest in May. I still don't think it's going to be negatively. As long as they say that, market is not going to be negatively surprised, right? That's one. The other one, we've been trading since middle of December, right in this range. It could, it's been, what is it, months, almost 5 weeks. Maybe, another 5 weeks we trade in this range, right? Scenario number 2. 480, 470. Scenario number 3, we don't hold the 50-day moving average, which is around now. It's going to be 467, 460, right? That's kind of the major long-term support, right? Medium-term support, I would say medium-term support. So this is medium support number 1, right? We don't hold that level, and then we break below that level. Those are the 3 scenarios. I think all possible. They all have different probabilities. Nobody can tell you for sure this is exactly what's going to happen, but as a trader, you have to have an opinion, right? And maybe after, what is it, 20% run up in spiders, maybe you want to, you could obviously have continuation. You could have 30% rally, like we had back in, April to August, right? That was, I think, 30% rally. So maybe this is another 30% rally. So that's scenario number one. Scenario number two, just sideways. Nobody really sure in terms of interest rates in the dollar, but earnings are still better than expected. Unemployment is still low, and we just chug along through February and March. And the third is some kind of negative news, right? Either from Powell or volatility, some liquidity issues, and stuff like that. All right, so those are the three scenarios I would consider going, into the, we're in the earnings, right? And we're approaching kind of crescendo, probably first week of February. That's where most S&P 500 companies will announce earnings and will know the results of Powell's speech. So you have to prepare your portfolio, right? You can have all your positions bullish, you can have all your positions bearish, or you can have mixture, right? Too bullish, too bearish, right? So you want to figure out what your portfolio delta is, right? Are you overall bullish or are you overall bearish? So with that in mind, what do you guys think? One, please type in one if you think this is meaningful breakout. We're in the middle of the breakout. Semiconductors already broke out, QQQs already broke out, and IWM and ARC will follow, and we're having scenario number one. Two, we kind of just, people are not sure, and we just chug along for another month or 2 months between 480 and 460, 480, 460, 480, 467. And then three, we're going lower. Two, okay. Mark, thank you. Andre, BJ, Don, Ed, Jeff, Jim, Mark, Martin, Michael, Patrick, Bob, Peter, Raul, Rick, Steve, Jeffrey. What do you guys think? Three, okay. 2, 3, thank you. Andre, 2. All right, so 2, 3s. Nobody thinks we're gonna have a breakout? Jeff, okay, we do have, oh no, BJ, 1 for now. Okay, so we do have most people between 2 and 3. I don't think 2, right? Because we have too many events. We have today's expiration. For now, I don't see a lot of spike in volatility, or so it could be Monday. So if it's not, we have one event, then we have today expiration, doesn't look like anything's happening, and then we have we could go sideways till end of January, right, until the Fed. So that would be I think a major catalyst, right? Because this sorry. Right, we need to reconcile, this move in yield, right? It was yield steepening, right? People basically say, well, it's a yield steepening process, right? We're in the bull market, right? Soft landing. This is 1995 scenario. You have 30-year yield is going to continue grinding higher, right? It's already at October 22 highs, right? This is a major breakout, and we're heading higher, that's what yield's supposed to do, even though it's obviously negatively affecting mortgages and home builders. If we get back to 5 or 6%, that's also not good. But maybe 30-year continues going higher, but 2-year is underperforming, right? 2-year is not at October. Approaching October level. 2-year approaching October level of 22. But it's not at that level yet. 2-year is actually almost there. 10 years almost there. So this rise in term structure, right, across different expirations of Treasury lifting up all boats, right, and dollar lifting up all boats, it has to reconcile, right? So either the 10-year drops, or in yield, a dollar pulls back, right? We do have a pretty bullish setup, and the dollar continues to rise. So either the dollar and 10-year drops, and VIX also gets back to the 12 level, right, or 10, right? I mean, we have a spike, probably for now not significant, or we have reversal in QQQ, right? Or we have reversal in QQQ. Those are the two options. So for that reason, I think that divergence, I don't think is going to last for weeks and months. I mean, probably between now and, I would say, middle of February, we'll have either move to the upside, decisive move to the upside, or decisive move to the downside. I mean, right. So that's kind of, I mean, QQQ already made new all-time high this week. So, if it continues to grind, if it gets above this uptrend next couple of weeks, then, then this would be a breakout. So I favor, my own portfolio, I'm slightly bearish, right? I have bullish positions, right? How do you manage this uncertainty? Well, you want to be bullish and bearish positions, right? There's a lot of market neutral strategy. You can be a little bit, delta positive, right? A little bit more bullish, or you can be a little bit more negative, bearish. I would, trim some of your long positions going into the next 4 weeks, and I would start thinking about hedging, right? How do you do that? So we do have different services at Tradespoon, right? One is I think Stock Forecast Toolbox. It's a neural network, right? Based on neural network technology, based on AI. It learns on the data and gives predictions every day to stocks and ETFs, right? So it's a very important tool, right? And just remember, it basically shows you probabilities, right? It doesn't say, well, spiders, it cannot go above 481 or it cannot go below 471. All it says that the trend is neutral right now, right? We're fluctuating between gains and bearish and bullish. Right now it shows negative, neutral. And it does see potentially retesting all-time highs. And we're not that, I mean, for what's today high? We're very close, 480, right? So we basically retested all-time high on spiders. And for day trader or short-term trader, or even long-term trader, this is very important information, because if you're buying at 480 or 481, you're probably overpaying. If you want to go long, I would wait for at least short-term pullback back to 475, right? It's a big difference, right? 1.5%. So if, let's say you take a midpoint, right? You can time it perfectly to 481, 474, but let's take a midpoint, right? If you're consistently can save even 0.5% on entry and exit from your long or short-term position, then that's a huge benefit. So I encourage you to try our neural network models. You're not going to find models like that anywhere, right? Very few people are willing to actually say, okay, a lot of people say, market is going high, but very few people are going to say, well, in the next 5 to 10 days, that's support, that's resistance, that's the trend, right? People usually don't like to commit to time, right? It's very difficult. But this model does that. It gives you probabilities, right? It's never 100% accurate, but right now it's 70% accurate. All right, 70% of the time, if it says 481, 474, market closes in that range, right? And so that's very important, right? And you want to make sure that 480 or 471, those are support resistance. You can zoom out for 10 days. It does show you the range, right? It basically says, yes, we can break 480, maybe 483, maybe 485, right? But we also could revisit that 50-day moving average around 468, right? So it gives you a range for the next 10 days. For the next 10 days, if it dropped to 468, 469, I would be a buyer, right? Especially if you're bullish on the market. And at 484, I would maybe consider trimming some of your long positions. So that's an important model that I encourage you to review. VJ around 5,000 to be turning point. I mean, could be, right? It could be. 5,000 is what, 20 points away, another 5% rally. I mean, it's all possible, right? It is possible. I do think that you can have these breakout, right? Or attempted breakout, and you have failed breakout. 483, 485. I mean, 500, I think it's a little bit too much. But we'll see. It just depends. So that's the model. And you can zoom out, right? You can zoom out to, I mean, you can zoom into 1 hour if you're doing day trading, or you can zoom out to 6 months. 6 months model also, basically says after the October and November, I mean, after the, August, if you rewind and look at this model in August, September, May, it was extremely bullish, right? Why? Because the trend was bullish, right? The trend was bullish and it was maintained. But after October sell-off, starting, October, November, December, you can see model basically shrugs and says it's neutral, right? We broke the long-term trend in September, October. The long-term trend is broken, and right now I'm neutral. Model is neutral. So basically, same thing. As you're approaching 480, 488, you probably want to go short, right? From long-term perspective. I mean, BJ could be right. We could hit 500. We've seen where the stock market overshoots. You will probably need IWM to reverse. You probably need the yields to drop in order to do that. If you have that situation, then yes, it can get to 500. But you're chasing the rally, right? You're chasing the rally, and you can get lucky, or you could get stuck in a big pullback. Ideally, in a long, in I mean, we're in the middle of January. Ideally, if we drop to get close to 467, gets close to 450, this is where you want to start buying, right? If you're a long-term or medium-term investor. At 488, 484, that's a little bit ahead of itself. So this is an important tool that I encourage you to review. You do have company screener, right? So a lot of people are asking, what do you invest, right? So we do have, semiconductors, right? Electronics, 56%, right? It gives you kind of which sectors are leading or which are underperforming. Well, consumer staples, food and beverages has been underperforming, right? Going into January, right? It gets updated once a month because these are long-term trends. So you can spot opportunities like work from home, right? Some of the work from home stocks are in strong uptrend going into January. And you can zoom in and just to see. So that's basically can give you a sense of which sectors are leading the market. People do ask me all the time, like, what do you invest? So if you're bullish, obviously you want to invest into the sectors that have broken and confirmed the breakout, like semiconductors. I would probably say that's the strongest sector. It did break its uptrend, right? So it did break the uptrend, but it was able to get above this uptrend. And as long as we are above 160, the 2020, highs of 2021, it's gonna, it's a pattern of higher highs and higher lows. So you want to invest into a sector that did break out. If a lot of people ask me a high beta stuff, my answer is no, right? I talked about this at length, this overhead resistance. I said, what, when we broke through July highs, it makes sense to invest into high beta stocks. But now we have 4 weeks in a row of red candlestick, and it looks like we're going to have another red candlestick, right? That's a pretty bearish price pattern, right? So you don't have, it's a similar situation as last year. There's only Magnificent, well, it's not Magnificent 7 anymore, maybe Magnificent 5, right? Apple and Tesla is kind of also following ARC Innovation. But, whether it's Magnificent 5, I mean, there's other stocks like Visa, that, it's not just Magnificent 7, you have stocks like Visa, continues to grind higher, right? That's been very strong. You have stocks like GE, right? That continues to, outperform the market. So there are pockets, some stocks that are still in confirmed uptrend, right? So those are the probably stocks or sectors that you want to invest. If you see a breakout, right, some kind of consolidation, especially for a couple of months, and the breakout, usually it stays in this uptrend until you have big reversal in the market, which for now we don't have. Any questions? All right. So that's stock forecast toolbox. We have other tools, right? So there are two types of traders we have in terms of computing. We have experienced traders, right? They have a trading plan. They know how to execute the trades. They have their own risk management profile. So they're using tools like stock forecast toolbox, or they're using some of these picks like active trader, right? Weekly trader, the difference between active trader and weekly trader and monthly trader is just time horizon. Different models, but optimized for different time intervals. So active trader is short-term trade, right? Couple of days. So waste management, right? It picked up waste management, right? Bob actually mentioned it a couple of days ago, and model periodically picks it up. This is a stock, again, long-term consolidation, break above that, and there's a continuation. And as long as it's above 175, waste management continues to grind higher. All right, so that's the stocks that I would trade either short-term or long-term, just depends on your time horizon and your style. And we do suggest you, if it's the short-term trading, then it's looking for 1% gain and use dollar cost average, right? Ultimately, you don't even know today, are we going to close up or down today, at the end of the expiration. So for that reason, always try to use dollar cost average and have specific entry and exit price. These are just suggestions, right? You can say, well, 1% is not enough, I want 2%, or 1% is too much, I want 0.5%. That's, you can decide. But that's geared toward experienced traders that have risk management tools, right? And they already have a trading plan that they've been executing successfully. If you're new to trading and you're still not sure, right? I propose not to start with these services like pick, weekly, monthly, because you're going to ask questions like, what if it's never got to 182 or 183.51? What, it get up 184.02, never reached that level. What do I do? Well, if you're asking that question, you probably haven't traded long enough and you probably don't have a solid trading plan. Then I would encourage you to start with a lead service, right? With a lead service is where you can actually follow my trades, right? And I can answer any of these questions, and you can actually see what I trade and how I would trade what waste management or earnings strategy or anything like that. So in Trader Log, a lead service, you have you can see orders, you can see positions, right? You can see orders, you can see positions. All of my orders, all of my positions, and there's a morning bell and closing bell, right? I encourage everybody to participate in live trading room, or if you don't have time, watch the recordings, right? Because getting signals, active trader, stock forecast toolbox, these are models, these are tools that give you probability better than you just looking at the chart, right? It gives you increased probability that the trend is correct and the range is correct, and then but you have to navigate, you have to execute. So that's what the lead circle is, right? You will see how I trade these signals in the first hour of the market session, last hour market session, and along you can have recordings, because if you can't participate live, you can at least watch the recording. And I encourage you to do it for the next 3 months. Watch the recordings. I always start the same way. The first 10 minutes always the same. You need to have a trading plan. Here's the main points of the trading plan: number of positions, position size, how to select strike price, how liquid the options are or stocks, right? So we go over all these checklists, right, before you get into the trade. And I actually suggest, if you have $10,000 portfolio, hypothetically, right, that's the average, I would risk only 2.5%, right? I don't want to risk more than $250 per trade on $10,000 account, right? It doesn't matter what you trade, futures, options, options on futures and options, second, third, fourth derivative, all great and wonderful, but doesn't matter what you're trading, it's $250 per per position, especially if you're new on $10,000 account. So if you do participate, you follow this checklist, and what I do in the live trading room, you follow my trades, you enter and exit when I do them. And you do this for the next 3 months, I believe that you will see a significant improvement in your performance, significantly more than any monthly subscription charges that we charge. And that would be my approach to Tradespoon. There are a lot of trades, right? You can see last 7 days. Almost every day there's some trade, right? Some of them are earnings trades like HBN and Key, right? We're doing a lot of earnings trade, Key, hedge, right? So I closed my February hedge, right, when the market pulled back, and I rolled it into March, right? Because I think February might be too tight, right? The February expiration 16 might be not enough time because you still have Microsoft and Apple announced. But I think after February 16, there is a elevated probability that the market can have a meaningful pullback. Oh, so I want to hedge that event. In case it happens, this is how I hedge, right? So that would be an example of option hedge. I do stock hedge, right? You can buy inverse QQQ, inverse Spiders ETF, which I also have. And I do show short-term trade using stock, like Disney was a trade that I traded using Active Trader. So full transparency, right? You can see all of my orders, you can see all of my positions, and I try to do both options and stocks because some people say, Vlad, these options, this is just too much. Volatility curve, term structures, gamma, theta, vega, that's just too much. Okay, totally understand. So I do give both option and stock examples. What else? GE, right? So Mark asked about GE earnings. I mean, GE is one of the strongest stocks, right? It's a one-way trade since October of 22 with very little pullbacks. There's always, I mean, industrials haven't really started their earnings. The bar is set very high, right? It looks like it's losing momentum, right? So I don't think there's going to be any big positive surprise. I don't think there's going to be any big negative surprise. My take on the GE before it announces earnings, I wouldn't do it today. I usually do it the day before. Definitely don't want to do it during expiration or day after, Monday. But I would do similar approach I did with Key, right? Key, or what did we do? USB, right? I mean, granted, these are regional banks, they're not industrial, but I think the reaction for industrials will be similar to the reaction to regional banks, right? It already pulled back significantly. It's at 50-day moving average. Bar is set kind of low. So they have mixed results. So all of them beat, not all of them, but some of them beat on the bottom line, earnings per share, but the revenue growth they missed. The number of new loans origination, they missed. So it's kind of didn't go anywhere. So I think it's going to be similar results, right? TSM, right? That's the bright spot. So far in earnings, the bar is set low. The company was losing money in 23. They came out, they bid on the bottom line, they bid on the top line. They say, listen, by the way, instead of revenue deceleration, we're actually going to grow 20%, in 24. Well, the bar is set low, right? It's underperformer for a very long time, right? It still hasn't reached. What did just happen? I forgot how to do it. Reset. So in general, right now, I do favor market neutral strategies, right? Maybe with slightly bearish bias, but yeah, what's doing. But anyway, but you know, it's an underperformer, right? It's an underperformer because it hasn't reached that level. All right. Any questions on General Electric earnings setup, Mark? Iron Condor, yeah, I would do Iron Condor for earnings crush, yeah. But I would, again, I wouldn't, right now, you don't want to do it. I personally would not do it today, right? Usually I do it the day before because market could get volatile, you know, today or tomorrow. It doesn't look like it's very volatile today. Right? It's actually moving to the upside, but it could get volatile. Any other questions? Okay, so we talked about General Electric earnings, and this is my approach to all the earnings. Sometimes I hedge with a stock, or today I actually tried HBM. Right, if I see some mismatch in the implied volatility and historical volatility, right, then sometimes I would go long. Like here, I went actually long. It's a small trade, small investment. HBM did not have, the puts were extremely cheap, and I thought the surprise would be to the downside, so it makes sense to invest and buy that 12 put. But I was wrong. But most of the time it's iron condors, right, or just selling credit call spread or credit put spread. Sometimes I do go long, like long volatility, right, either long put or long call. But most of the time it's a selling of volatility, but rarely I try to have that double, triple, quadruple return, right? Some people just love investing 15 cents making 90 cents, which is a good strategy. You only need to be right 10-20% of the time to make it work, but it is a lower probability strategy. All right, any other questions? All right, so we went over Elite Circle. We went over Active Trader, allows both stock and option trades. We went over Stock Forecast Toolbox. I mean, there's other research screeners we have. In terms of following trades, we have, if this is too many trades, right, you'd say, Vlad, stock, options, I don't like to make decisions, just make it very simple. Give me one idea every other week and that's all. Well, that's a robo-investor, right? It's a stock, stock portfolio. Or if you only trade in option spreads, then it's premium portfolio or spread portfolio. So you have different types of portfolios: options only, stock only, or mixture. Right? Some people want to see both or want to learn both. So that's the idea behind it. Any questions? Andre, BJ, Ed, Jeff, Jim, Mark, Martin, Michael, Patrick, Peter, Rule, Rick, Michael, Steve, any questions? Yes, the market is at higher close for the high. It's a divergence, right? It's a divergence. My new topic I've been following. I mean, I always follow money flow, right? And research on macroeconomics in terms of money flow. There are a lot of positions, right? Like about structured notes, right? Structured notes are getting really popular in the past, few years. I know several companies that whole business revolves around structured notes. You go to UBS, RBC, they're all selling structured notes. What are structured notes? I mean, there's different structured notes, but right now, you get 5%, yield, right, on your cash, right? So UBS takes that 5% yield on UBS on cash, right? Plus they go in and sell puts, right? They sell puts, collect extra credit, right? Then they package it, right? And they created a structured note and they sell it. Well, these structured notes usually, like in the case of UBS, they're leaps, 1 year out, 2 years out, which expires today, right? And then when you do have these expirations, right? If somebody sold a put to UBS, billions of dollars worth of, GE put or Schlumberger put, well, the dealers have to buy that, right? They have to buy put. How do you, if you buy put, you have a risk, right? How do you offset that risk? You buy a stock, right? And then when the structure notes expire, today for single stock or for indexes in December, in February, these dealers holding a lot of these paper, a lot of these structured notes, and when the option expires, worthless, right? When the option loses all, expire worthless, what do they do with loan stock? Well, they can buy a put again, right? Or they can sell a stock. So when these expiration months come in, you could have this avalanche of selling of these structured notes. And a lot of market makers, a lot of firms, a lot of hedge funds, they follow these flows, right? They look at the macroeconomic data, they look at the option term structure, volatility, if they see divergences, like right now, all these market makers, they're salivating, right? Because QQQ is at all-time high and VIX just jumped from 12 to 16, right? Why? Why did it go up by 50%? They're thinking that, there are a lot of people, these structured notes go to expiration and people hedging their stock position, they're buying puts or excessive amount of puts. And that's what, pushed the market. And it's not the best timing indicator, it's not like, okay, today's expiration, but they're watching the market. They see these divergences. They also see divergence, just like, BJ said, 10 years going up. Before, when 10 year goes up, right? When 10 year was going up, market was selling off, right? Market was selling off. Starting, let's say, right, July, June, right? I mean, it was stable from May to June, and that's when we had a big rally. Here, again, there was a little divergence, but it didn't last that long, right? It lasted till July. But as soon as the rate continued to go higher, market would continue to sell off up until October 18th, right? The expiration, double, triple top, and then starting first week of November, everybody was selling treasuries and the market rally. Well, now treasury going back the other way. Why is the market not going back up? One theory, or actually, some people think it's not a theory, but it's the flow of these structured notes. They come to expiration. These dealers unload them, maybe on the day of expiration, maybe Monday, maybe sometime next week, or they wait for certain events like Fed, right? If Fed sounds hawkish, then they said, okay, I have too much concentration, I'm going to unload my stock position. So that's why when you see these divergences, they usually do not last that long. There are two scenarios, right? Either the yield is going to drop back to 3.8 and market continues to rally, or yield is going to continue going higher, and at some point, obviously, QQQ will go roll over. How long does this divergence last? Well, it's a data-driven, so you look at the data, and you're looking for some kind of an event, right? Usually, when Powell speaks, that's an event, right? Powell, spoke on December 15th, right? Then you have a big drop in yield, right? Or one of the Fed speakers that says, we're going to do something with interest rates one way or the other. Or earnings, right? Earnings, if enough companies either underperform or outperform the expectation, then that could be the trigger. Do I think the move in yields has further to go? I mean, in addition to macroeconomic data and flows, right? So, structured notes and alike. You also have, I mean, you have geopolitical risk, and then you have elections, right? It's an election year. Yields cannot go that too much higher, right? At some point, Biden is going to be concerned, right? The current administration is going to be concerned with high yields, right? And we already have issues with reverse repo, right? And how much liquidity banks have in terms of cash. There's already these sulfur hiccups that periodically come and go. So a lot of people think that Fed is not an independent entity, right? Everybody has a boss, right? We all have bosses, right? I have my wife. Some people have their CEOs. Everybody has a boss, including the Fed, right? So they will, if rates continue going higher, right, to a certain threshold where Fed will think this is going to create some problems, liquidity issues, then they will come up with the policy, right? One of the theories why did the Fed start pivoting in December? There was no reason, right? Unemployment was still low, inflation is going down. There's no reason to come out in December and say we're going to lower interest rates, right? There was no reason for that because it's price stability and it's employment, and both of these check mark. Why would you go out and imply that you're going to have 3 interest rates? There's 2 possible answers. One is you have a boss, and the other one is you see some kind of liquidity issues in the market and instabilities. So the theory goes that this is the year where rates are going to keep going lower. So I agree. I believe that rates are going to go lower. Right now, it's a pretty large move, and we are approaching major overhead resistance, right? On 10-year yield, I would say it's 430. Actually, 50-day moving average dropped significantly. So for now, I mean, we're above 200, above 50. That's not, as long as we're above 200-day moving average, I think next level could be 430. And a lot of people calling that 430, and that's the top. I agree. I think if we get above 430, Fed is going to blink. We're going to get close to the elections, and we're going to start cutting rates. BJ, thank you. Any other questions? Meanwhile, we have, nothing has changed, right? IWM is negative, ARC is negative, gold miners are negative. I assume regionals are negative, right? Yeah, well, slightly positive, and you have divergence, right? And Google is up 2%. And Germany continues going south, right? Europe is, China is in free fall. Europe kind of free fall, right? This is a pretty bearish price pattern. But QQQ is making all-time highs, right? QQQ is making all-time highs. Semis are making all-time highs. Spiders are retesting all-time highs. So it's just a question of how long this divergence can last. All right, any other questions? Thank you, BJ. Andre, BJ, Ed, Jeff, Mark, Martin, Michael, Patrick, Peter, Raul, Rick. Thank you very much. Have a great day, right? Keep an eye on the market, right? There are signs of being concerned. That doesn't mean that NVIDIA is going to drop tomorrow, but there are signs of concern. I would be market neutral right now, right? I wouldn't be overly bearish. I think you can buy QQQ put spread, you can buy SH, and that's like insurance. This is the time to buy insurance, right? Before the hurricane. You don't want to buy insurance when hurricane starts. It might be a little bit too late. So, but there is a possibility that after such a long rally, this is the time to start thinking about hedges. All right, thank you very much and have a great day.